Celsius just reported their latest quarterly figures and it was a beat across the board. Can you imagine, right? After all the news that we covered on the channel with regards to Celsius, headlines, negative reports on Celsius slowdown, they beat across the board. I wonder how that could have happened, right? How can a good company that is well run, that still has a lot of momentum, beat across the board? Yeah, that might be something special, right? Anyways, let's cover the earnings report. At the time of making this video, the stock is up around 10%, going back to over $45 per share. Now, year to date, stock is still down 22% or so. It was up quite a lot, actually, at 2 points, was up close to 80%. But then, of course, all the negative wave came into play. So, could be a great opportunity. As you can see, the analysts are still expecting this company to grow quite fast year after year. Sales growth of around 25-26% for fiscal year 24, 25, 26. And EPS growth 36.9% for fiscal year 2024. And then closer to 28-26% in fiscal 25 and 26. My opinion, still a fast growing company. If we look at a couple of valuation metrics, the stock keeps going up, yet it becomes cheaper and cheaper. Of course, some people might say it's not cheap enough. Fine. For some people, nothing is cheap. For a lot of others, I think this is a very, very good sign. So before jumping into the report, if you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with a comment here from the CEO. So Celsius today reported its best second quarter financial results ever, delivering records in revenue, gross profit, and gross margin. Celsius continued to lead the energy drink category, contributing 47% of all second quarter growth. And we believe that we are well positioned to capture incremental category dollar share. Celsius innovation is giving customers great tasting, better for you energy drink products that are filling a white space and bringing new customers to an evolving energy drink category. And so our friends here at Consensus Gurus shows us a beat across the board. Revenue, North America, international, gross profit, gross margin, adjusted EBITDA margin, and EPS. Beat, all green. Now this time they actually showed us their strength, right? They wanted to show the market, investors, look, we're Celsius, we might be small, but we can keep on growing and take market share, as you can see right here. They're of course not done yet. I mean, if you look at where they're available around the world, just because you've seen Celsius drinks, by the way, in your own countries, does not mean that Celsius officially sells them there. It might be privately imported. But right now, what can we expect? Well, we can expect them to grow in the second half in countries like Australia, like France. They're growing now in Canada, better than expected as well, but still very, very small. The UK as well started in April 2024. But overall, most of the sales is of course United States, but in the future, I do expect international to become bigger and bigger and bigger. So overall, what do we get? We get revenue of $402 million. That's up 23% year over year. North America, same thing, up 23% year over year, with international growing 30%. Gross margin keeps on improving, 320 basis points improvements year over year. Net income is up 55% year over year, and diluted earnings per share is up 65%. They also tell us that Celsius sales to Amazon increased 41% year over year to approximately $39.9 million for the quarter. Now, how does Celsius compare to the others? Well, of course, they're number 3 here behind Red Bull and Monster. But if you look at their performance, right, year to date, they are outperforming. But I do have to show you this slide right here, again, comparing Celsius to Monster and Red Bull. So we've seen a small, let's say, slowdown. Monster has been dropping for quite a while now, but more recently Celsius have dropped a little bit, while Red Bull has reaccelerated a little bit, so keep an eye out on that. They did tell us that Celsius gained approximately 35% more retail shelf space, increasing the average SKUs selling per store to 20 from 15, according to Circana's last 4-week read. They also say here that approximately 12.1% of Celsius' total US sales to PepsiCo in the second quarter was to food service channel. Now overall, as you can see, we are now entering, well, we are in Q3, which is usually their best quarter. Now, what can you see here? You can see that Q3 2023 was the strongest quarter ever for Celsius until Q2 right now. So usually historically Q2 has been weaker than Q3. Right now we are in a stage where Q2 is already stronger than Q3 of 2023, which is usually their strongest quarter. So the next one should be a pretty good one, but of course maybe the year-over-year comparisons will not look that great because, well, the comps are more difficult than usual since last year this was the best quarter by far. But to me it's pretty simple. As long as I see this trend continue, as long as I see that each and every year this quarter become bigger and bigger and bigger, the company becomes more and more profitable, they keep taking share, then it's all fine. I think we were still going to hear a couple of things here and there with regards to energy drinks, with regards to a slowdown. Then again, I mean, it's the summer months right now, so I do think that most of these companies will do quite well. And one last thing here, just to show you how things work. The average analyst price target, even before this earnings report, sat 75% higher than the price we're at today. And it's not like they have not changed their price target, right? When the stock was extremely high, when was it, the $90 or so, the average analyst price target was at $90. Since then, it has gone from $90 to $72, when the stock went from 90 plus to all the way down to 41. So they did change their price targets. Of course, price drives sentiment, but it's still way higher than the price we're at today. Now, of course, a lot can change in the coming days, a couple of upgrades, a couple of downgrades maybe as well. The market is very, very volatile, macro, geopolitical stuff, etc., etc. Take all of that into consideration. Right now, if we look at the graph, of course, we had that double top, then the stock dropped quite a lot, not just 44%, actually dropped all the way down the bottom here, close to 60% drawdown. So that's something. On the weekly, RSI is very, very low. On the daily, of course, it is oversold. Now, I do want to see if the stock can make its way back up to the 20-day moving average. That's a bit closer to $49. Whether or not it will make it today remains to be seen. There's probably still going to be a little bit of weakness in the stock market. Maybe a small rebound from the Black Monday, let's say, but don't expect suddenly smooth sailing from here for all the stocks. But keep an eye on those levels here, $49, $50 or so. Previously, that was a sort of support baseline. Now we have to make our way back up. So overall, pretty strong quarter by Celsius. The stock will do what the stock will do. If they mention something extraordinary or alarming during the earnings call, I'll pin it in the comments down below. But overall, they're still showing, look, we're becoming more and more profitable. We can still grow. So what's the problem here? To be honest, no problem. Of course, energy drinks might not be your cup of tea. That's fine. Plenty of other stocks to buy. So that's about it for this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if you're not, and I'll see you all in the next one. Bye bye.